There is a substantial risk of loss associated with trading Forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
All right, welcome to the weekend edition of the Sick Market Watch. I am the slightly sick Steve Vetterl. Today is the 5th of March, broadcasting live here, and hopefully our OBS software, which was just updated, works well. So, if I'm coughing and hacking and sputtering, bear with me. So this website up here, as you may be able to see, is our Market Watch. I've actually posted that in the Telegram room. This is our Telegram channel. Please follow us. We are sort of building back up. I had at one point thousands of subscribers, and we decided to bail from Telegram and go to the other AP Live, and now we're on the OBS version, which quite frankly is much better. So in any case, let's start with a quick review of what transpired over the last week. And our hearts go out to the people affected in Ukraine, from myself and my partners, not only at First Down, but Auvoria. We all wish the war did not rage on. But unfortunately, reality has set in with us on this. And let's take a look at how it's affecting global markets. So I'd like to look each week. I'm not going to get too involved in this because I think if I talk more than about 20 minutes, then I'm just going to start hacking up a storm, but we'll see how it goes. All right, so finviz.com, click on all after futures daily charts. This is where we are. Each of these days represents a single candle: red up. That's funny. Red down, green up. And the bananas move in both WTI and Brent oil has been nothing short of spectacular, right? And the drop in equities, especially in Europe, has been nothing short of mesmerizing. But equity markets are still holding solid. I find it interesting that the small caps are actually doing better, as you can see with the Russell 2000 here on the daily chart, than the broader market. Not just the 30 Dow Jones Industrials, but the 500 that comprise the S&P and the tech-heavy NASDAQ 100. These all look like at some point we want to go back down and test the 4100 level on the S&P, which is a pretty big one. So you can see from the line I'm drawing, just a very simplistic chart. I'll jump over to TradingView at some point, but just wanted to kind of show this here. But going back to everything we're seeing on the screen, this is just, I mean, if this isn't inflation, folks, I don't know what is. And the surprising moves in some stuff with the absolute cratering in live cattle and the rage in copper, it's hard to tell anything. So from a risk manager perspective, we're looking at the screen on full tilt. It's kind of like playing a game of ping. Well, actually, you know what? How about playing a game of pinball? If in the old days with the you got the bumpers and you're playing the game and you're shaking the thing around and you're hitting all over the place, the ball's going wild, and then all of a sudden the whole machine goes tilt and everything freezes up on you. It's kind of what we're seeing in global markets right now. And I just choose not to trade during this period of time. So, I mean, I absolutely have my hands full trying to buy vehicles and furniture, moving down to Florida and getting the business off the ground and a whole host of other things. So my hat's off to the team in Cabo. Wish I could join you. Been way too busy to barely even get to the beach on Florida, which is really sad. So in any case, I'm not going to get into all this stuff, but let's take a look at the markets. Typically, can't always say that that's every day, but typically the rush to credit or quality pushes equities down. And I want you to see what's going on with the 30-year and the 10-year, right? So in both of these cases, I mean, the 30-year has jumped almost 8 points, which is a pretty big move. It takes us all the way to the back to the beginning. You see this sort of area of resistance here, the beginning of 22. So we're all the way back in terms of prices. Good for those buying a home, at least here in the US, where mortgage rates are typically based on an aggregate of the two, mostly the 10-year bond. And LIBOR, obviously, but the rates have jumped up a bunch. Thus, bond prices are going up, bond funds are going up, and the yields are dropping at this point. So that's typically negative for equities, but there is so many what they call uncorrelated and decoupling markets out there. It's hard to really gauge anything. So in a banana situation of full tilt, I should title that the theme of our chat today. It's hard to really estimate anything from that. So other than doing nothing, excuse me, I choke on myself here. Other than doing nothing, the best thing I typically have always recommended during periods of time like this to students that want to protect capital or investors is to spend this time learning and focusing on education, right? So studying the market, studying fundamentals, studying the analysis of earnings, studying technicals, charts, patterns, right? Wave analysis, which I'm not a big fan of, Fibonacci's, whatever your particular area is, moving averages, an amalgamation of standard deviation. You guys know I prefer the Bollinger Bands, but the Keltner channels are important too, right? They're all a measure of craziness, right? And to what degree is that craziness outside of any particular even range. So with that being said, in a period of full tilt, what typically happens to global assets? They find the area that is most secure. And right now that's the US dollar. So here we go. I haven't seen this area in a while. And I actually prefer with this chart to jump back and look at the dollar on a better charting platform. So let me do a full screener. Let's take a look at 1 year. Actually, let's take a look at 5 years. Okay. Actually, let me double check one thing. So weekly chart, yeah, let's just stick with that. Let's go back. All right. So where was our absolute craziest reaction on this? What is probably going to be one monster area of resistance is this just under 102 area. Also note that from at least a weekly perspective, we almost touched a weekly Bollinger, and we'll pull back from that. See how that happened right here on the 22nd of November. Key minus each of these candles is a weekly chart. Green up, red down. We're just looking to see where potentially our next area of movement is. You can sort of inversely or flip this upside down in a a mirrored format and reverse it to see what's going to happen with the euro, right? and then all the other pairs, and the pound for that matter, and then all the other pairs can sort of start from that. If you haven't heard me exhaustively talk of the concept of pin action, right? So it's the movement of one, or the energy that is transmitted from one something that's getting hit to other groups of. One of the best examples I've ever thought about is a bowling alley, right? So the ball hits the first pin, energy is transferred through the other. How many pins are in bowling? 13? Am I right on that? Energy is transferred to other pins, and it creates a reaction, right? Some are more violent than others, and that energy, as it's transmitted through any group, unfortunately, you can also use a car pileup as an example of that, right? I call it pin action. All it really means is that if something happens, right, NVIDIA warns. The pin action of that is going to be most of the video or chip based competitors are probably going to pull back as well, right? So if they warn, you can bet, or if one's doing fantastic, like an NVIDIA, which is overpriced, I use as an example a lot because it's been one of my most winning stocks over the last 20 years outside of Intuitive Surgical, which is Da Vinci robot. But the pin action of this, as I get off of me long typical diatribe, right? Gotta love it. How does that reflect into the European market? So let's take a look. All right, so euro again, weekly. I'm not even looking at dailies at this point. It's almost irrelevant because we need to look at the longer term areas of support. So I'm saying that since 5 years ago, this one spot 07, almost the century mark perfectly at $1.07 was the support. More than likely, if this continues in Ukraine, I hope I'm wrong and it's settled, we're probably going to see this area. I'm betting we visit this area. There's probably a whole bunch of missing notches down here. I'm not going to get into what that is. I've talked about that in a lot of different Saturday calls over the past couple of months. But more than likely, there's some missing auctioning down here. The markets may want to take it down to this point. So without belaboring the point, let's take a look at the pound. Me belaboring the point? Why never? All right. Look at this. And we're already there. Again, weekly chart, pound dollar. Look at that. Maybe it'll finally become affordable for me to buy some sort of British vehicle, right? But this 32 area, 32.25-ish, all the way down, I'd say, to the century mark, right at 32, should be some pretty big support. This gives way, or back down inside this entire lower range that I'm circling here. No, I hate using drawing tools because they're hard to erase. All right, so staying big picture here. Dollar Canadian still in a tight range. Really surprising. It's just like, it's almost like the market fell asleep in this area. Nothing to report there. Dollar JPY, nothing. Remember, these are weekly charts. Like even in Aussie land, I mean, just really tight consolidations going on. Now, notice this euro British pound broke lower because of just obviously the big euro weakness, right? So you're going to see considerably more strength in almost everything that is paired with the euro in any major or cross type category. Pretty big support down here, long term. Spot 8260-ish. Remember, these zones are just that. They're just zones. They're not particular points of nail, right? You want to only get into a particular zone. Right, so let's take a closer look at GBP CAD. This is the neo currency. In my last month of hell and moving and all this fun stuff. It's great being a Florida resident now, but I haven't had too much opportunity to listen to Neo's call. I'm actually probably, hopefully, going to be getting together with Dasan, who's the developer of Variable. He lives in Orlando here for maybe a couple of beers next week since I'm in the area, try and reconnect with everybody after the trip to Cabo, see if I can sort of get things a little more cranked up in the local relationship department. So I'm going to be working on that. I'll have maybe some more insight to provide, but I've really tried to stay away from just one product or another as their track records continue to build and they continue to perform well. I'm really liking what I see in Panther, which is not a martingale-based system, which typically adds to a losing trade, thus putting you continually further into the red, which works exceptionally well in a market like you see here. So if one is trading somewhere in front of short this area, now obviously we're looking at weekly charts, but just the conceptual theme here, if you're trading in front of this, a martingale system will keep adding trades on until you almost get to such a stretched period of whatever kind of analysis like you see here with the touch on this Bollinger Band at that 78 area. Or opposite side of the equation, certainly down here, there's a pretty good chance we probably can go back down and test this 0.67 area. Wouldn't bet against it. So just keep that in mind as a longer term. This is a very long term, all the way back to the post-pandemic lows. So it's almost like it found its footing right in 2020 at this lower range here at spot 67.15-ish. And then obviously the high on this is that one spot 77.20-ish area. But really looking for it to tag this probably. Be interested to see if this holds. It probably would be a little more of a decent longer term. And that's only provided that we get some sort of settlement with the geopolitical situation in Ukraine. Hey, what else? Notice we're right on the edge of this pound Swiss. Don't talk about that too much. Pound yen. Aussie Canadian. This must be noted because we are up against some pretty solid resistance here on the weekly. There is what's called confluence here, and if I can get a little bit bigger, which I cannot do. Let me just, maybe that's a little easier to see. When you get into an area of confluence, really just is a sophisticated term for there's a whole bunch of things lining up in the same spot, right? Could be Bollinger Bands, could be moving averages, could be support and resistance lines from previous areas of touch, either high or low. It could be market profile. See now there's some on the market profile chart here. If one can, if we all can sort of agree that this is solid data coming in, I've always been questioning the volume-based data that comes in on this, but if we can agree that it is solid data coming in here, you see this notch that's missing right in here. From an auctioning process, you're always going to want to fill that. So that means we could spend some time rejecting this area, you know, obviously provided the Canadian dollar maybe wakes up and starts to rally globally against other pairs, would push us back down in this area where I would think we'd want to have some more trading so that we can fill in some of the missing notches. Something hasn't auctioned there, it typically over time will go back to that area if it's an efficient market with large volume. That, my good subs, is the concept of auction market theory, AMT, or market profile. Let's take a look at gold from the spot price. Now, as I had been mentioning, I was expecting us to blast through this upper area, probably see 2100 before this is all done. And just keep in mind that I'm actually going to jump to a monthly chart on this. We've never seen a higher price than 2080-ish for gold. Today's dollars, I should say. Right? We could actually go up and test the high of gold. We haven't seen that. It'll be essentially a doubling from this cup with handle low. But every time we've come up into this area, there's just been a massive beatdown. It's almost like there's a bunch of institutions that have huge reserves that call each other up like, hey, gold's close to 2,000 an ounce. Let's start selling. Now, the other crazy thing this weekend is the fact that oil's just absolutely rocketed up. I mean, we haven't seen these kind of numbers on oil since November of 2014. I mean, it's just crazy. And, it's not normal, right? I think at some point, this is probably going to be just in a beautiful area. Stay tuned on this one to be double short via an ETF or to buy some sort of ETF that double shorts the oil markets. You can just Google out there. There's a whole variety of choices in that. Just Google double short oil, and this would be more of a longer term or a swing type trade. Because a lot of this could be building into what's called a shooting star pattern. So if you look over the course of, obviously not pandemic where this was just sort of a crazy rip, if you take this out of the equation, when was the last time in any of this period of time you're looking at on this chart since 2002 that we've hit the upper Bollinger Band? See right here? May of 2008. This is the last time we actually wrote it up because this was just absolute mania like we're seeing right now. These are what's called outliers. These are extreme outs. These are areas that one can, with a safe amount of comfort, trade on. Now, obviously, this could just absolutely completely barbecue all the shorts that are up here and rip up to 140. In which case you will see me more than likely publicly coming out with some sort of short position on this, which is very rare for me to do. Very rare. The last time I did that was March of 20. And I do that because I think it helps in terms of our clients and in terms of just making just calls on stuff only from a ridiculous risk out perspective, or a just absolutely completely ridiculously overpriced market, like I talked a lot about in wait for it Boomzer Tesla. There's a weekly chart on the Tesla. And now that we're living in Florida, we can actually go see all the SpaceX Falcon rockets launched. Pretty slick. But I can't say it was this high, but right around the 1100 area, I was coming out and saying I would totally be taking major profits off the table on this. You'll get an opportunity to buy it lower. Okay. The funny thing is I'm actually becoming an Elon fan. Who knew? Who knew? Let's see what's going on with the coinage. The daily. I still think if we look at the weekly on this one, we're going to be seeing somewhere in this 20,000 area. I mean, this is really where liftoff took place right here. A visitation back to this point with some sort of decent basing pattern that plays out. This is something that's more than just a couple days. Obviously, it's something that forms over time. These types of breakouts after a big correction and on a good product or a good stock or whatever the commodity is, and as long as it's quality underlying you're buying and not pets.com, the basing patterns have over an 80% win rate on stuff like that. So, all right, what else? Let's take a look at the Forex calendar. Not that this matters, but this is next week. And actually, you know what? Let me start it. There's a reason I was here. Jobs numbers on Friday. Thought that was important to point out. You could see that, I think everybody that was sucking the government dry in the U.S. is running out of money, and now they have to get back to work, and the boost in jobs. Unemployment rate falls. I mean, this is typically good. None of this matters. None of what Chairman Powell said matters. I think he did have some hand in pushing up Treasury rates and hence the dollar. Obviously, with some of his comments, you could certainly read the writtenness if you want to dive into it. But coming into next week, don't want to discount the importance of any of this stuff. And this would probably be of interest to me. I'll probably catch a little of the notes on this one. But I mean, outside of this, you guys, there's only one thing that's taking front and center stage right now. And until that's solved, we're all in a holding pattern. And anything can decouple and trade anywhere. So from a risk manager standpoint, and I give you a great example. Working through one of our big builders in Europe, and in many cases, I'll get somebody that send one of the builders an email about something. This typically involves larger dollars wanting to go in some of these EAs, which is cool. But I always will ask the questions, which I find never come to me answered. If somebody has a large chunk of money they want to put to work in a bunch of EAs, right? So as long as they're comfortable, spread it among a few, they're all good. Some are martingale, some aren't. So it's just a matter of doing your due diligence and listening to the developer's call each week or the recording of. But you're better to listen to the call with that kind of money because then you can ask questions provided you know what you're doing in terms of setup, right? But outside of that, the questions I'll always ask are, how much are you putting into it? What does the allocation look like outside of it? So I don't need to know the numbers, right? But I need to know something like, hey, Steve, I want to put, ideally you're coming to me with something like, I want to put 5 to 10% of my investable wealth into a couple of EAs. And if that's 100 grand, great, okay? But be on the alert from a risk management standpoint that I'm always going to want to know, are you diversified elsewhere? Because if you're not, and you're putting a chunk of your money in this area, and it's like, you heard of a really good fishing hole, right? It's on the edge of the ocean. And, everybody said, oh, just take the, really light boat out with those little teeny propellers so you don't, disturb the fish, right? And you're just sitting out there by yourself and all of a sudden some huge shark comes out and gets you, right? Maybe not the best analogy, but I'm kind of trying to think of some different ones other than all my F1 analogies because I live in Florida now. But the key thing is just know what pond you're fishing in, right? Understand what lurks beneath, and always have a curious eye for the risk management. I know it sounds boring, but the fact I think I've pounded it into the vast majority of our builders' heads around the planet, and they have in some version, whatever language, communicated that to the field that I'm doing my job, right? This is not something that you take $200,000 of US dollars and that's all you have and you put it all in 5 EAs or 2 EAs or whatever the number is, right? It's too risky. So unless your parents are made of gold and you're going to be inheriting multiple 7 figures down the road, if that's the case, have at it. Wish everybody a great week. Always be on alert for the risk. My name is Steve Vetterl. I hope to be alive on Tuesday so I can present this call to you guys. And we'll get a little bit deeper in. Pretty sure I'm going to be changing the times to 10 a.m. Eastern time, so spread the word, and maybe my laziness will get off, make the changes with management at AP so that we can broadcast earlier. But I don't want to interfere with any of our Saturday. I know we have a bunch of calls at noon time, our AP kickoff and our what I like to call cheering calls, but I may do it at 10 a.m., which I think doesn't stand in the way of anything. So everybody have a great week. If you got any questions, hit me up on Telegram. May the trades be with you.
There is a substantial risk of loss associated with trading Forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.